then you get again to the $300 range for silver. It sounds sensational, but if you're looking a few years in the future, if you look at what silver has done in the past and how it relates to gold and inflation, I think it's actually a very realistic target. Certainly precious metals are a place to look for a safe haven. They always have been in high inflation scenarios, and this is not going to be any exception, that's for sure. Precious metals have proven themselves as hedges for millennia. Silver and gold are the first ones that come to mind. They're both monetary metals. They've been used as money for thousands of years. Silver, in fact, even before gold. And if you look at what's happened with those, if we look back even just in the past century, back in 1913, when the Fed was established, silver was 60 cents an ounce. Today, it's say $25. So if you calculate the compound rate of return on silver from 1913, you're actually looking at 3.88% compounded over 108 years. So yes, that came with a lot of fluctuation, but I'd rather have an ounce of silver that cost me 60 cents back then than have the 60 cents from back then, which would be worth essentially zero today. So, these things ebb and flow. Investors need to look at the kind of environment that we're in. There's something called recency bias that I just kind of want to explain. It basically means that it's a fancy term, but it kind of means that, people get complacent and they start to see the future as close to the near past. They expect things to continue to be the way they have been recently, and things can change dramatically, suddenly, very quickly. And so we are certainly entering an environment where it's rising inflation. And in those environments, it's been shown that stocks and bonds do not do well. Stocks tend to, on average, in a rising inflation rate, stocks tend to be down about 10%. Bonds tend to be down about 4% annually. And then you have precious metals that, in fact, mining shares tend to go up about, I think it's 13%, precious metals up about 24%, and commodities up about 26% in this kind of environment. So hard assets, gold and silver in particular, are definitely the place to be with this sort of higher inflation and persistent high inflation environment.
And how, in general, do the mining stocks versus the physical metal perform in this kind of environment?
So they actually tend to leverage the price of silver or gold. They tend to do quite well. Of course, an investor is taking on risk by investing in a mining stock. So naturally, they need to be compensated for that risk. It doesn't mean that all these mining stocks will perform well. What we're looking at is, this group of stocks as these stocks as a group and as a sector and how they perform. So typical leverage, if you look at what they've done in the past, you're looking typically at about maybe 2 to 3 times what the silver or the gold price will perform. So it is a place to be. It's interesting too that investors don't need to take a whole lot of risk. If you look at gold mining shares, for example, gold producers, and even some of the mid-sized gold companies, producers or developers, but gold producers in particular, the top 50 gold producers are actually all now free, on average, all free cash flow positive in about the last 2 years. That's something that hasn't been the case for them for about the previous 25 years. And as a sector, they actually outperform net of inflation nearly all other sectors. So, and then the yields, they pay dividends that are much better than bonds or bank accounts these days. You can get very easily, you can get yields on larger gold producers that will range anywhere from, say, 1% all the way up to even 4%. And that's in a sector that's very undervalued. So your risk is low, your yields tend to be high, and you're investing in a sector that has shown itself to perform well in this kind of environment.
I know you've talked about in the past, like $300 silver and some price predictions on the metals. As we're talking also about inflation and the dollar being devalued, how meaningful is a price like $300 silver?
Well, it's a very good point, and that's partly one of the reasons why my forecast or my target is that high, is because, if it's something that only happens 4 or 5 years down the road, it's going to be with even more devalued dollars. So in that sense, to me, it's it becomes a more realistic target, because it will simply take that many more dollars to buy an ounce of silver. And, I don't get to these targets to be sensational. I'm actually working on writing a book called The Great Silver Bull that I plan to release early next year. And in the book, I talk about how I get to my target, and there are multiple ways that I reach $300. One of them is if I look at how my forecast for gold. And so I think gold will ultimately reach at least $5,000. If you look at its high of last year in August, it was 2,000. That's only 2.5 times its all-time high. And again, that's without taking into account inflation or the fact that we haven't finished, we haven't reached any kind of a peak in this bull market. So say $5,000 gold. And if you use a gold-silver ratio and then you use a low in the ratio, which happened in 1980 when silver peaked at $50, so that was a ratio of 15. So gold-silver ratio with gold at $5,000 gives you, I think it's $333 silver. So that's one way that I get to silver above $300. If you look at inflation-adjusted prices, silver from silver at $50 in 1970, and you use realistic inflation numbers, which tend to run more like 7 to 8% over the last 40 or 50 years on an annual basis, then you get again to the $300 range for silver. So again, it sounds sensational. But if you're looking a few years in the future, if you look at what silver has done in the past and how it relates to gold and inflation, I think it's actually a very realistic target.
So in your view, then, is silver a better play right now than gold?
I think so. I mean, I think investors should really have both, be exposed to both, and have some exposure, ideally, even to the mining stocks in both metals. But yes, silver, I think, has the higher potential from this point going forward. Silver tends to outperform gold. We've seen that happen in all the previous bull markets. Silver started doing that last year. If you look at both the silver price and silver stocks in 2020, silver outperformed gold almost 2-to-1 in 2020. And silver stocks in about the July-August period, when both metals reached a peak, silver stocks started to outperform gold, and they've actually maintained that outperformance ever since then. So as I say, silver tends to outperform gold in precious metals bull markets. It tends to do that in the later stages. And based on what I've seen happen last year for the stocks and for silver itself, outperforming their gold peers, I think we've entered that stage, and that I think that will maintain itself for the next several years. And because of that, I think silver has so much more potential. There's something else to point out, is that if you just compare gold and silver, you can compare silver with other metals as well. But gold is relatively close to its all-time high. It's about 10% off. Silver is 50% below its all-time high, which it reached in 1980 and was close to again in 2011. And if you look at all the major metals, base metals, precious metals, platinum group metals, silver is actually the only one of all these metals that is still below its 1980 high. So it really has a lot of catching up to do. And as I say, it tends to do that in the later stages of the precious metals bull market.
In your perspective, where we are right now in the precious metal bull market, we've seen a lot of consolidation really since August 2020. Does it look like to you that we're about to break out to the upside, or we're going to see more consolidation from here?
I would have to say it's, in my view, kind of difficult to say how close we are to breaking out. There is something that noticed very recently, and that is that the gold-silver ratio is back to 80 or just about 80. And if you look over the last sort of 50 years, that's about the level at which it tends to peak. It has peaked higher, but many more times than not, it has peaked at 80 and then started to fall. So when it starts to fall, silver starts to outpace gold. And it tends to mark when the ratio starts to fall from 80, fall down, it tends to mark a point where both silver and gold do well, with silver, of course, outpacing gold. So on that basis, I think that we're certainly getting close to a new up leg. And, it's been nearly maybe 16 months or so since both metals have peaked in August of last year. So I think that we've spent plenty of time digesting. I think that in the next few months, it looks actually quite promising for both metals.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.